Well, I always like to say our job isn't to try to figure out what should happen, it's to figure out what you think or will happen. And think back to 2021. CPI started the year at 1.4%. It finished the year at 7%. And the Fed said, "Oh, don't worry, it's transitory." And the S&P was up 27% for the year. So, do I think the Fed should be cutting? Absolutely not. Inflation's been above their 2% target for 4 years. But President Trump will put in a new Fed chairman. The only way that person's going to get picked is if he wants to cut rates by at least another 1%. And so you can do anything you want. You can say that inflation is transitory, much like they did in 2021. In this case, I think it's actually probably closer to being true. And so that just is going to keep the rate cuts coming. And the market, to your point, Diane, is trying to be rational and say, well, really, we shouldn't have that many. But it doesn't really matter that we shouldn't have that many. If we get them, that's just going to keep flooding easy money into the market. And that's just going to drive stocks much higher because inflation is bad for the 50% of the population that doesn't own stocks, but it inflates everything from real estate to stocks to crypto to you name it. And I think, unfortunately, that's what we're going to get, which is why I think as you get towards the end of the year, it's going to get a lot choppier because you're going to be dealing with the after effects of that, much like you did in 2022 when you did have to deal with high inflation.